Hello, everyone, and welcome back to our financial education series. Today, we're going to talk about a concept called absolute return. Now, I know this might sound a bit complicated, but don't worry. We're going to explain it in a way that even a 5-year-old can understand. So let's dive in. Imagine you have a piggy bank and you put some money in it. Over time, you add more money to your piggy bank, and sometimes you take some out to buy toys or treats. Absolute return is like looking at your piggy bank and seeing how much money you have now compared to how much you started with. It's the total amount you've gained or lost, no matter how long it took or how much you put in or took out along the way. Let's say you put $10 in your piggy bank, and after a while, you have $15. That means your absolute return is $5 because you gained $5 more than what you started with. But if you put $10 in and ended up with only $8, then your absolute return is negative $2 because you lost $2 compared to what you started with. Absolute return is important because it tells us how well our investments are doing overall. It's like keeping score to see if we're making money or not. If our absolute return is positive, it means we're making money. But if it's negative, it means we're losing money. So it's something we always want to keep an eye on. And there you have it, folks. That's the simple explanation of absolute return. Just think of it as checking your piggy bank to see how much money you've made or lost. I hope this video helped you understand this concept better. If you have any questions, feel free to leave them in the comments below. Don't forget to like and subscribe for more financial education content. Until next time, happy saving and investing.